What's up, guys? So welcome to episode 1 of a new vlog/podcast series I'm going to be doing with other real estate professionals in the industry. I noticed that a lot of the commercial real estate vlogs that I do, there's not a lot of good content regarding actual commercial real estate owners, the process of the industry, how deals are sourced and how money's put together. I figured that since a lot of the deals I'm doing are with these larger operators like today, why not do a little sit down and let you guys listen in on our conversations and do a little bit of a podcast. So I hope you guys enjoy episode 1.
But yeah, this is the crib, hours, and all kinds of different, food. Dan Fisher I talk to probably once a month kind of thing, not all the time. Yeah, I like Dan.
I met him on Twitter.
Oh yeah?
I don't know how, but we started talking.
You're on Twitter?
Yeah, I just joined.
Oh, nice.
Dude, I feel like real estate Twitter's a real thing.
It's insane.
I'm on Twitter, yeah.
You haven't tweeted in a while.
I kind of dropped off. It just got it's really negative a lot of times on there. I don't like the vibes sometimes, so I just have been staying off for the most part. I'm in a private group of MHRV guys with dude Baker and
Baker Montgomery, whatever.
Yeah,
he tweets a ton.
And there's a couple other big guys that he knows that brought him into the group. So we talk in the private group, but I've been off tweeting just because it's just kind of a negative vibe. I feel like people just like to talk shit about. It's I'm gonna talk shit about other syndicators to make myself look better, and I'm just fuck you guys.
And then everyone talks shit about brokers.
Yeah. I don't know. It's what it is.
Yeah. All right. Well,
I might get back on.
We're running. All right, guys.
Running. Cool.
I'm here with Dylan Marma of the Requity Group. He's a 28-year-old real estate investor / syndicator. He's bought north of $100 million worth of real estate by now.
Yep. Over 150.
Over 150. Okay. And if you want to give a bio in your group, what you guys do, what you focus on.
Yeah, sure thing. Well, happy to. So, thanks for having me on here.
Yeah.
And as far as my background goes, I'm from upstate New York, and I took a less traditional path where I went off to school for 2 years and basically just found myself in a position where I really wanted to get into, I think I was young, hungry, and entrepreneurial and wanted to find a way to get into the real estate investing business some way. And sure enough, I went off, bought a one-way ticket to sunny San Diego, went off to work for a real estate investing education company.
And that was the Jake and Gina one?
That was actually a company that was called Fortune Builders at the time. And they basically were teaching people how to go out and, fix and flip houses. But I kind of hit a perfect timing to go there. For me, I was just, I was 20 years old, just looking for wherever I could get my foot in the door, right? And I wanted to get around the real estate investing space, learn myself, and it was just a good sort of first time way or first job to kind of put myself in a position to get exposed to all different types of real estate investing.
Yeah.
So,
cool.
So while I was out there, I was living in San Diego. It was an awesome experience, surrounded by a lot of entrepreneurial people that were actively building their own real estate portfolios. Yeah. I quickly learned that I did not want to fix and flip, and that was seemingly just a grind of a business and not really where true wealth was built. I bought a few buy and hold single family real estate investments, and then actually, the timing was great for me because the time I was getting there, the company and the leadership was really shifting their focus towards commercial real estate investing and investing heavily into syndications. And today, that's their main business arm.
Okay, so when you, in a lot of this podcast, I'm going to be asking kind of selfish questions. Just
sure thing.
So how old were you at this time?
I was 20 years old when I got the job.
And were you just F college, or were you in college at the time?
No, I dropped out of school. I was going to school for accounting, and then I just think I had a wake-up moment where I really wanted to kind of take a chance at that time in my life.
I did too, by the way. I dropped out with a semester left.
Wow.
Yeah, because I was already trying to sling real estate on the side, and I was like, dude, I can't cold call and stuff on the weekdays. And then I was just like, you know what, F it, just
That's great.
Dropped out, but I was still going. I was an idiot at the time. So
no,
I totally could have finished.
Yeah, I was still, young, hungry, and just wanted to get after it. So
yeah, I had this wake up moment where it was similar thing where I'm going out all the time and just surrounded by college. So I was you know what, I gotta get out. But,
exactly.
Right, so you're in San Diego and you were single family home flippers all the time.
No, I went to go work for a real estate investing education company that basically did fix and flip as well as commercial real estate, and then had an education base of people that they taught how to do it.
Okay, cool. And then where'd you go from there?
So from there, I realized that I wanted to get into the business myself and kind of go all in on commercial real estate. When I was about 22, 23 at the time, I was able to get in front of a lot of really successful real estate entrepreneurs that had, built probably $100 million plus net worths for themselves. And I had a whole business plan and basically said, I want to dedicate, I'm going to leave my job to go all in on building this type of a business. This is how I'm going to get educated. This is how I'm going to learn the business. This is how we're going to scale something meaningful. And I was getting a lot of positive feedback in response from sharing the plan that we had in place. And then I just really bought into a small single family portfolio and bought into 21 unit apartment building, and with a couple partners as like a JV to kind of get on base with medium, even I consider it to be small multifamily, and then just took a leap of faith to move out to the southeast to get myself around the deals. And fortunately, after a ton of networking, found a few partners that had an existing portfolio but had never actively raised money before. And I came in really understanding the syndication business and was able to go in there as sort of the young, hungry sweat equity partner to come in and help find deals, raise money, asset manage, right, and built the processes out to kind of scale to where we together we worked on about 800 doors of multifamily. Okay. And so I got my start with multifamily.
Was that on your own as far as like break that down for me? And you kind of went from finding a deal to like raising money. Was it like you just found a couple of multifamily deals that worked and you brought it to a guy that you just partnered on and rolled it in, or like?
No, it was me, and I had 3 partners. They had existing multifamily real estate holdings, and I came in to partner with them on syndications together. Okay. So we all pulled together to raise investor money to close on these deals.
Okay, cool. And then how'd you eventually transition to starting Requity Group on your own? And then if I'm jumping a lot,
no, that's fine.
Let me know.
Yeah,
because I like hearing I feel like a lot of podcasts or interviews, everyone kind of talks about what they do and everything, but there's no like actionable steps of how they got there.
Sure.
That's why I'm curious, like how your actionable steps work, because I'm kind of in a roadblock myself right now where I feel like I've been brokering / sourcing deals for like 3 years now. Pretty successful, but I haven't seen like a clear way of like how to jump over to the buy side. I'm curious like how you did that and then
Sure. Yeah, so it's always a series of random events, and there's no cookie cutter path to getting there. Yeah. In my case, I just really was able to sort of burn the boats and go all in because I was, young with young, single, no kids, and really was able to just dive and dedicate everything I have towards getting into this business. And sure enough, one way or another, it worked out. And when it comes to, that's what I attribute a lot of it to, is just your commitment level. Yeah. Because I was ready to go. I remember telling myself I'm ready to go 5 years without making a penny in this, because I'm playing this as a long-term game. This is a vehicle I'm committed to mastery in, and still am, and I see myself doing this till the day I die, right? Okay. So once I made that commitment, I think that's where it starts. Then you kind of will start to connect the dots and put the pieces of the puzzle together. And I said no along the way. I was saying no to any small commissions or short-term money, right, that I could have made, which was always in my face, right? But I knew that I was playing the long game because this was the vehicle that I saw being a great way to create wealth, build a long-term business, work with a great group of investors and team and so on. So that was my I think starting point, was just getting the commitment, and then finding again the partners. And I learned a ton along the way through just mentors and going out and networking. I was never afraid to ask the stupid questions or look dumb for raising my hand whenever I was out there. So that I think worked really well early on. And then pivoting, I guess stepping forward towards starting Requity, after a few years of experience in the multifamily business with my partners, we had a great foundation, but they were all a different age in life and different position, frankly.
Yeah.
And I think we just had different goals, and it became very apparent after several years of working together.
Yeah.
Where we said, hey, look, I think the things we want right now and what we're willing to do to get things we want just is not aligned. So at that time, for me, for instance, I really had a bug in me to go out and build a great real estate investing platform working with our private investors, right? And I also, at that time, just saw a better opportunity in the mobile home community space versus, I'd watched sort of the cap rate compression that took place in apartments. And when I saw the yields that were still possible in the MH world, I said, well, this just looks like a really good opportunity. So it was sort of a combination of things, but we just had that conversation. And at that point, it was actually a week before COVID broke out. So it was this crazy timing where I thought the whole world was going under. At the time I was getting ready to start launching the business. And there's so many things you just don't know at that point in time, but I had a general idea for the type of company we wanted to start. And sure enough, it ended up, growing pretty quickly after that. So.
Cool. Yeah, so for those who don't know, his group, they mainly focus on buying large mobile home park and RV campground communities. And if you watch the YouTube, coincidentally, I broker large mobile home park and campground communities. So you're doing multifamily. How'd you first find out about like the whole affordable housing thing in mobile home parks? Or was that already, I know it's been talked about a lot for like the last 5 years. Now, I feel like the last 2 years, especially since COVID, just went
I was in Knoxville, Tennessee at that time. So when I first moved to the Southeast, I ended up in Knoxville, Tennessee when I was in multifamily for several years. And I'd met Jim Clayton on a few occasions. I had talked to a ton of people that were buying mobile home communities. So it wasn't like this obscure idea. It was something I was constantly seeing getting done on the sidelines. But I think I had a breaking point when cap rates started compressing in multifamily down to from whatever 7% down to 5%, we'll just say, for example, and I was hearing my friends complaining about how they were struggling to find 15 or 20% cash on cash returns in mobile home communities. I'm like, dude, if you can get me a nice solid 10 or 12% cash on cash return, I'm thrilled because I'm having a tough time getting half that right now in apartments, and we have a lot more CapEx issues and other issues that you don't have to deal with. So once I had that light bulb moment and I saw that the gap was just too great where the returns didn't make sense versus the risk on MH versus multifamily, I said this is a real opportunity. And since getting in, of course, the industry has gotten increasingly more competitive. So, we've kind of watched cap rates compress closer to multifamily today. But it was a unique window of opportunity, and it was a great way, for us to get started, to get some great assets under our belt with our, as our early investments for our investor base. So
what was I remember when you first called me, like, it's probably 2 years ago, or like right in the thick of COVID. You were still what were you doing with Charles Dehart? Was he just brokering MH in the industry, so you guys partnered up in the beginning, or what was kind of the start there? Because I remember when you first called me, he reached out to me, mentioned that he was buying stuff, and I remember you reached out, and then Ian Tudor told me about you. It was like, oh, he's a stud from the multifamily space. Sure. So like, what was kind of that transition?
Charles is, him and I partnered on probably, our first 6 or 7 deals or something, somewhere along those lines. So while he was actively brokering, him and I were partnering on a bunch of different MH deals, and guys was extremely helpful. Learned a tremendous amount from him, and we still keep in touch, in all the deals that we've worked on today. And
I know you guys still own a couple.
We own a bunch. We haven't sold anything yet. So
cool. He had me evaluate the one you guys had in Hubert. By the way. Just right near that one deal that I think Caesar sent over to you or something like that. Yeah, but okay, so as you grew Requity, and I think he just split off because he wasn't looking to do like as large of a group or whatever you were doing, or whatever, you guys went separate ways. With the Requity, was the focus on buying these communities did you just have one major capital partner, or do you have a bunch of people that you raise money from, like retail investors, kind of Grant Cardone style? And I know that's what you're kind of shifting to recently with all like the social media push. But like, how did it start, and kind of where is it today?
our investor base is primarily high net worth investors. We have over 150 active investors throughout we have multiple funds as well as individual deals that we've raised on. And
did that rapidly increase like from the beginning? So let's say like the first 5, 6, 7 deals you guys bought, was that with like a few key main capital guys, or did you already have a big investor base? And then like how'd you even find that investor base? Because I know like everyone talks about it's easy to find money out there, but I feel like it's not that easy.
No, it's the hardest part. I think anyone that thinks it's easy is significantly underestimating it.
Yeah, that's why I feel like everyone loves to say, oh, if you find a great deal, you'll find the money. But I'm like,
no.
Will you? Like,
no, I mean, thankfully, from the few years I had in multifamily, I had some investors that were willing to follow me into our first deal. And since then, our base has just grown substantially, primarily through referrals. I think, even doing podcasts and some online stuff, a lot of that stuff we do is for our current investor base, just to keep up with what we're doing and sharing content. We occasionally do get cold leads in from the internet, but it's really been a referral-based business. So the vast majority of our investors came from other investors introducing their friends and family to us after having a positive experience with us.
Cool. Yep. Cool. And then, so I know originally you guys were buying mainly in the Southeast, and then you did the really big push into campgrounds. And now I feel like you guys are really focused on more so campgrounds than MHPs. Would you, or just quickly
we're focused on good investments, right?
So
like that's what we're focused on. Is like I want to get into a good investment, and I want to make our investors good cash flow, reduce the risk, and create a great IRR throughout the deal, right? And MH was where we found some great investments, and in the last year it's been more difficult to find great good investments there, right? So naturally, as a result of that, the campground business has been where we've had more activity recently. I love MH. We're still actively looking at a ton of MH right now, and we still have recently done some, but we're really focused on just finding good value for our investors, doing in asset classes that we know and understand. And RV and MH, I think, have a lot of similarities, but a lot of differences. So we think the campground space has just got a lot more true mom and pop deals right now, good value add opportunities, whereas the MH, a lot of these owners have been called on dozens of times. They have pie in the sky numbers in their heads already if they haven't sold. So it's just more difficult to find that same level of return that we're targeting for, right? So I think that's really where the last year has taken us. But that's kind of our thing, is we are just trying to keep a pulse on either MH, RV, and we even have some local multifamily in the market we know well, and we'll still look at that as well if the returns are attractive enough.
And I know that you guys closed the recent one, Monroe, with our team.
Yep.
Monroe Village, whatever it was called.
Yep.
Are you guys looking at more so nationwide now rather than staying with your stronghold in the Southeast? Or is it just because it's large enough deal you could have management there? Because I know typically you were growing like from the North Carolina region, but now
Southeast is always going to be our preference for the same reasons most people value the Southeast, but also because we have scale here. It's a shorter plane ride, and it's easier to manage when you have scale. But without a doubt, we're open to going past the Southeast, but the further out we go, I would say that the better of a deal it has to be to get us to look at it, right? So we're not going to go just for like a right down the fairway single. We're not going to be going across the country, right, to make that happen. Like I think the areas that we don't know as well, we need an even better margin of safety in the investment and the price point that we're going to get it at, because it's not an area that we know as well. So inherently, it has kind of more risk to us. So whereas the Southeast, we can get a little more granular and say, well, we really know this market. We know what we can charge there. We know what we have a general feel for the growth that we're seeing in the market, and we can feel a lot more comfortable being more competitive in the markets we already know really well.
I actually have a few pre-recorded questions I want to ask you. What does and I'm always curious, like other guys in the industry, what does like your typical day look like? I'm sure you're reactionary to what comes up, but like, do you have a typical structure? Like you wake up in the morning, like what's like first thing you do? When do you usually wake up? And like, what does your day kind of look like?
Yeah, so I'm not a super routine person by nature. I usually wake up somewhere between 5 and 6 a.m. And then I I head to the office pretty quick,
Okay.
and then I get a lot of my quiet during those first few hours of the day before everyone comes in at 8:30 or 9 o'clock. I'm getting a lot of my busy work done, emails, and checking on all the major projects that we have ongoing, kind of going through my to-do list. And I usually really use those first few hours of the day to be super productive. And then once 9 a.m. hits and everyone is actively, and I'm like a walking distance. Obviously, you know that because we're in our office now. But I'm like walking distance from the office, so I can wake up, get to the office, have a cup of coffee or tea, and then start just getting to work right away. And then, but yeah, once like 9 a.m. hits, that's usually around where I have meetings if it's a meeting day. Try to do like our internal meetings on Mondays. Sometimes they roll into Tuesdays, and then I'll have like other meetings kind of scheduled for like usually the early afternoons, and then later afternoons. Yeah, sometimes how the business is, like it gets crazy where you almost have to keep white space on the calendar to just handle nonstop calls, emails, putting out fires. Like I can't, there's only so much you can control. You almost need to give yourself like that buffer room in my position where it's like, I'm going to use this time to tackle the most important. If we have CapEx issues going on, if we have a capital raise going on, if we have a new deal popping up that needs some eyes on it going on, right? Like I'm still pretty involved in every aspect of our business. Our team's over 50 people now, mostly property management. So there's always fires going on, always people that we're having to hire, always, issues going on that, need taken care of. So it's just, tackling by, taking on the biggest priority. But yeah, as far as like my personal, structure goes, that's pretty much like most of my day. And then I try to, I actually usually don't eat until like later on in the afternoon. I like to fast most of the day, and then from there, usually at the end of the day, I like to have more of like a end of the day shut off routine. So I try to get my exercise in after eating later on in the day, and then usually try to get in some podcasts or reading or something that's going to be helpful just to be always growing in some other way.
What are some podcasts you listen to? I'm a big Alex Hormozi fan, Greg Cardone. Do you listen to Ryan Pineda at all?
I haven't, no. I've heard of him, and I haven't listened to too much on Hormozi yet, but I've seen some on social media. But I used to listen to quite a bit of Greg Cardone stuff. But lately, I don't even know. It's been a lot of I've been listening to like Huberman. You know who that is?
Alex. Yeah. So that's why I'm cutting out drinking.
Is that?
Yeah, because it's like drinking thing, and I was like. A lot of the like stress on like non-drinking days, like pretty much everything he was talking about. It's like, oh shit, that is like kind of
totally.
So,
all the I've been on a big health kick with like his stuff, and then just like some random YouTube binges that I'll go on occasionally, right? And just kind of like get into just getting into like better eating habits, better rhythms across the board, just kind of like optimizing day to day. But it goes in cycles, right? Like that's been my thing lately. Next thing might be fitness, then I'll be back into some real estate stuff. Do
you do anything crazy like red light therapy and all that stuff, or not that crazy?
Not red light therapy. Probably the craziest thing I do is just try to do. A lot of times I eat one meal a day, so that's probably the craziest thing.
I know ice baths are a big thing.
Yeah. No, I haven't done this yet. So.
All right. The other question I had for you with the operations of how you have your team set up, as far as the deal sourcing side, I know there's you and Troy.
Yep.
Do you have? I know you kind of talked about it once. We were like at MHI or something. Like you have a couple VAs that are calling for you.
We have
just in-house guys.
We have one. Yeah, we have one VA that does calls for us. Okay. That's been pretty helpful. We have a large overseas team in general in the Philippines because we have most of our staff, like 50 or so, are in the U.S. and we have a pretty large team now in the Philippines that handles a lot of our back end and support work. So that's been super helpful. They all have just great attitude, great values, and once you get it right, it can be just so helpful for a small business owner to have that just dedicated back office team like that. So but we have one guy that does cold calls, and then we have a lot of just broker relationships from there.
Would you say the majority of your deal flow was direct from brokers, or is a lot of it on market, or how do you kind of?
We've only done 2 deals out of 19 on market, so the vast majority have been off market, and it's honestly a huge mix. It's like some have been direct from our in-house team cold calling, some have been other industry owners we know that just are passing on a deal and will send it to us for a fee or whatever, and some are off-market broker deals. So I would say it's almost like a third each of those strategies. But yeah, we've been fortunate to have a pretty consistent pipeline since we started of just good off-market deals.
And then are there any wholesalers that are good? Because I noticed that wholesalers seem to move quicker, but they're also like deal style is way shittier. Like they have like crappier deals versus.
I don't know
like
if I've done any
brokers.
wholesales. I don't know if we've bought any wholesales yet.
Okay.
We've bought deals where someone says, "Hey, we're not going to buy this deal, but if you pay us, a fat, or a flat fee,
Yeah.
then they're going to
Or
flip."
fat
Yeah,
fee.
sometimes
Sometimes
fat,
fat.
but yeah, usually yeah.
Yeah. Okay, that's cool.
Freudian slip.
Yeah, as far as the brokers, like how do you ensure, like what is kind of your threshold for you actually personally looking at a deal versus like, I imagine Troy's like your first line of command just to be like, hey, does it hit these main metrics for us, and then we'll bring Dylan in, or how do you kind of
It all
that? 'Cause I know your time's more valuable.
It all depends, it's just like Troy is usually the first line, to get the deals, underwrite it and whatnot, but
Because I'm kind of asking like anything that I'm calling, like how do I know, oh, this is something that's going to hit you?
No, I
So
mean,
can make sure I
it
get
always
you
does.
guys.
There's nothing that, that Troy sees that we don't see or reveal at some point in our pipeline. So as far as, the deal flow goes, I'm still pretty involved, but it's usually more when, like I have my industry relationships, or certain brokers will call me directly and I'll just take it, and then, Troy's going to run point on making sure we get it underwritten and get a market study done, and then together we're going to figure out, if it makes sense, and then he'll usually do a lot of the heavy lifting on the due diligence, transaction management, with just my oversight along the way until we get it to closing, kind of thing. So it's definitely a team effort every step, and it's not we're not at the scale or the point where it's just basically Troy's just running deals, start to finish without me being involved, or vice versa, So.
Interesting. And then growing so quick from only having, let's say, a few deals to how many do you guys own now in total, you think?
19.
19, like, and that's only what, over 2 years?
2.5.
Yeah, 2.5 years. So how do you, what's kind of like the day-to-day thing of managing all the managers? I'm sure you have like an operations girl or an operations guy or something that heads that to manage the managers per se, but like, is it pretty systemized, or do you kind of just have to figure it out? Because I know like a lot of times these mom and pop style deals like give really good returns, and you can kind of modernize their processes. Doesn't it get tough like dealing with their managers that are in place and getting them onto your processes? And now you got to have that over like what, multiple different areas, cities, states, and everything with the managers there. I feel like that gets
Totally
complicated. No one ever seems to talk about that on the real estate side. They're like, oh, we'll just buy another 500 units, and they don't like really talk about the management they take on, because so many people acquire so quick, and then we find out later, like there's a few groups that we know that are in the news now, like, oh, all of their communities have terrible management, they raised rents $200 across the board, fucking tenants are all pissed. Like, how do you kind of manage that when you're looking at so many different areas, states, and spread out?
I mean, everyone's got a different strategy, and those kind of groups don't. Not super fond of them because they give other owners a bad name. But from day one, we've always been an operations first company, right? I haven't made $1 profit on our management company, and I don't expect to in the near future, because if anything, I've came out of pocket to fund it and staff ourselves to ensure that our operations are always a priority, and it takes a team to be really effective to scale the operations side. So in terms of when we started, we were almost exclusively operations driven hires for like the first year or so. We didn't it was a very long time before we really had like acquisitions and investor relations support. It was all operations first, and that's really for us still how I view it is we are an operations first company, right? We're not a capital raiser that happens to have to operate real estate. We are real estate operators that happen to need to raise capital because it's a capital intensive industry if we want to grow, right? So, and I think that's where people have it backwards. But if you focus on the operations and you get that right, then everything else kind of takes care of itself. You're going to find more deals, you're going to find more money, because your investors are going to see that you're executing well on your projects. So in terms of the structure, we have the head of our property management, and then we have regionals underneath her, and a regional. We have 3 great regionals right now, and just great that we've really nailed it with them and got that part right, which I think they're one of the most important pieces. And they all have, if you have 19 properties, maybe 6 or 7 each, right?
Yeah.
So you kind of divide out the properties under each of the regionals, and the regionals sort of manages their portfolio, where they're responsible now for sort of hiring and firing the on-site staff. They're responsible for executing on the CapEx projects. They're responsible for handling all the red flag issues, as they have to get passed up, and and then that kind of flows up as needed past them. But yeah, regional management is getting those team members right is crucial, and then it's from there. It's just like orchestrating, like how do you create the core values that are going to help you lead a successful organization. What are your meeting rhythms like? We have meetings almost every day with our management team down to our on-site teams, and some of those I participate at least once a week in the meetings with the on-site team. So we still know all of our managers down at the property level very well, and we try to keep it as flat as you can while still having the hierarchy that's going to be effective to allow us to have the speed that we need to have.
Yeah, and how do you learn how to kind of hire and scale that? Like, I feel like it's its own skill in itself almost.
Oh yeah.
Like, did you have it? Because I noticed I think this is like your first big company you're growing just on your own, right?
Yeah.
So like doing that, were you just taking from other processes you saw from the last guys you partnered on deals with, or were you just kind of, we need this, so let's hire it on, let's figure it out? Like,
I mean, it's always a learning process, right?
Yeah.
So like I definitely made hiring mistakes, and I've definitely made mistakes where like I'm kind of the type where or I guess my old self, I'd say, was the type where like at first it's just kind of like get someone in the door, right? Get the butts in the seats, and then just try to figure it out, right? And then over time we've had to become much more deliberate with like building our processes out and having like a formal onboarding, and not just assuming that like Armand comes on and he's just going to be jack of all trades, like Swiss Army knife of handling, wherever he needs to be helping out. Like we've been a lot more deliberate with like, okay, let's craft the position first. Let's come up with the protocol of this is the roles and responsibilities. This is what success looks like, and then find the right person and hire for the position, rather than just find someone that seems good in general, and then just have the position sort of morph into where they fit in, right? So we've definitely made all kinds of hiring and mistakes along the way, but we feel like we've definitely been effective with learning and like making the pivots quickly and adopting quickly, right? And I think that's what it takes to grow, is that you can make mistakes, but you have to learn quickly, and that's sort of how I see a lot of it.
Questions in probably like 5-10 more minutes.
Sure.
One question I have is kind of the process of finding a new capital investor, raising that money. You probably have the way that you do it now, but let me kind of break it down to two separate things. If you're an independent guy such as myself, I'm finding decent deals that I'm trading on constantly. If I were to go about to raise money for that as a young guy trying to do like my first buy, 2 ways I would go about it, and jump in if you think either I'm wrong or what you would recommend.
Sure.
One would be the first few, just roll in my fee as equity in the deal as an LP and just kind of see how they do it and go on that process. That's like probably the most passive, least likely to F up way, I think.
Yeah, sure.
Just because I'm good at the finding, I don't know shit about operations yet, so that makes sense. The second thing would be if I was trying to raise it myself, I would probably get the deal under contract and go about like just cold calling a bunch of other owners I know and say, come on, partner with me on it, I'd imagine. It's another way to do it.
Yep.
Is there a different option you would say from starting ground zero, or how would you go about it?
I would start with, well, it all depends on your desired outcome. So should we just say for this example scenario that the desired outcome is to gain operational experience and to know how to...
Yeah, because I wouldn't want to roll it in as LP and then learn nothing about how they like set up like their investor waterfall and shit like that, how they raise money and stuff. Like I want to be more involved in it.
Sure.
Or at least be involved in the operations.
Sure.
Somewhere along those lines. So
yeah.
Because eventually I'd like personally to get to like where I'm like, I'm buying deals and doing that instead of as great as brokering and sourcing deals are, being a cold caller the rest of my life is not too fun. Sure.
No, I get that. Yeah, I mean, there's so many different paths, right? And there's pros and cons to both, right? There's definitely, I can't say there hasn't been moments where I fantasize about what it'd be like as a broker to just wipe your hands off and go on to the next one, right? But we have the heavy lifting of having to be married to these things for years to come, right? So, so first I would get clear on the why behind, like, why do I want to be an operator? But once you've gotten clear on the why, because you can build well either way, but I think, for me, what I think the operator, I think the draw to it to me is sometimes that it's super easy to measure your actual results on how good you actually are doing, and you're the one taking all the risk, right? Like, you're the one signing on the loan, you're the one taking the risk, you have the money on the line, and though that can bring maybe stress for some people, I think that's also what keeps it exciting, is that we can actually see the results of our performance, and it's not just like no matter what we make money and just move on, right? Like, so I guess, and there's risk in launching a brokerage, there's risk in going into being a broker, so I'm not saying that, I'm not in any way saying that that's not the case, but I guess, like, for me, like, that's the part of being an operator that maybe drew me in and kind of keeps me in, is like I enjoy that aspect of the game of like having, you can measure down to the penny, like, how much cash flow you're doing. Did you hit your target? Did you hit your performance, right? Are you on track? So, and then obviously there's all kinds of surprises and things that you can't plan for that you have to just learn how to tackle along the way. So I guess I'm just sharing more. So my why of, like, why I like this seat within the industry. Then moving forward, once you've decided, okay, I'm interested in getting into being an operator, and I want to figure out how do I get into that first deal. I think sourcing an off-market deal is huge value, especially in the industries we play in with these alternative real estate assets. That there's tends to be a lot more like mom and pop and off-market deals that take place. If you have the deal, I mean, a great way to do it is to go and partner with someone else, if that's that's probably your quickest path to getting into the game. But that said, is that going to be the most effective path to you learning? I don't know, because if you bring a deal to us, just to be frank with you, and I've learned this through experience, you're probably not going to learn that much from us, because I already have a big team, and me saying, oh, well, instead of me having this run through our process that we've already done 19 times, I'm going to have Armand manage this one and do something different and play an operational aspect, and I don't have to teach you everything. Like, I've already spent years teaching our current staff and team how to do things. We already have it all dialed in and all the, you know what I mean? So it's like, it just creates more work for me, the idea of having to say, like, oh, I'll keep you in the operations and keep you updated every single step along the way. It creates a lot of work, right? So I say that because I've set that expectation with anyone that brings us a deal, is like, I'm happy to find a way to make this work, and I try to, but I can only go so far where I can't, you can't expect me to be on a weekly call with you, giving you the play-by-play on the deal, and you know what I mean? So,
get your own business going. One thing that we got this close and then we got outbid. I don't know who came in. I think somebody actually went around me that show too, but I had a 19 unit in Kansas City, Missouri, like the Missouri side, Kansas City, and it was a seller finance deal with $100 below market lot rents.
Yep.
So like the guy was charged like $125, the market was like $250 plus.
Yep.
All lot renters. There were just two unoccupied pads. So 17 occupied, city utilities, all direct bills, like super simple. It's like as easy as just go in there, raise the rents, do some improvements in the community. But we were gonna buy it for $235,000. I negotiated a guy to do 20% down seller financing with 3 years interest only. So it was like rock solid. We're gonna get into it for like $45K, and then we ended up getting outbid. But I had two of my buddies on board too, and we're all just gonna have $20K each and just wing it and figure it out.
That would be the best way to do it. If you would save up enough money, like that's how I did my first deal. Was saved up and took the equal amount of risk in a joint venture with a few partners. That's what we right? Like I wasn't the GP, so to speak, where I was leveraging my experience to profit
we
off
weren't
other
doing
people's
like
money.
GP up.
It's just a simple little joint venture.
We agree on separate roles.
That's where you're going to learn a lot more. I think you can still make great money and still learn a decent amount from coming with a good deal to someone like us. But you're going to learn more of just doing a smaller deal and finding a way to just get in the game, owning your own deal or owning a deal with a couple JV partners. Like that would be the number one way to get on base and get a kind of general feel for how the ins and outs work.
And like I know the goal is to always get to where you can get like non-recourse debt on deals, right? And then once you're in that game, now you can raise money easier than.
Sure.
Yeah. So like, what would be the game plan to like get to that level? Would it be like buy, sell, or finance deals now while I have no experience?
I mean, we're still on a ton of recourse, so I sign on recourse all the time, and I mean, it's the signer that takes on the risk with recourse, not the investors.
Yeah.
So generally, that's something our investors value because we've been able to get some attractive loans through doing so. So I mean, but that said, I probably take on more risk in taking on recourse, and not everyone's going to be interested in that, but in my view, that's my mentality, is that I'm going to put my name on the line to get the best results we can for our investors, and it's been a risk that we've been comfortable taking, but we definitely know it's not for everyone. So.
Okay, and then as far as you guys, last few questions, as far as you guys raising new money, I know that you're pushing the social media front now. I'm guessing that's to target more retail investors, or just get your name out there a little more so you could raise money a little easier. What's the goal with having the social media push? Because in my experience, the YouTube I have now originally was for unrelated to real estate stuff. And when I made some businessy type videos, it doesn't actually translate to results in actual business. It's like totally different, the social media.
Yeah,
it's
sure.
So different than the actual. Like when I got into the whole mobile home park, brokering, commercial real estate space, I realized no one gives a flying fuck about social media for the most part.
Yep.
Then now it's starting to come around, and I've found different ways to like, when I'm cold calling owners, now that I have like a website and some videos and some with my face on it, they think I'm more legitimate than some random cold caller, so it's helping that aspect. But as far as like translating views to actual money, I haven't figured out a way on how like Grant Cardone, the bigger guys do it. Maybe it's because they have just such huge brand reach that it eventually trickles down to like important figures.
Yeah.
But in your case, what's kind of the goal with, one, I know you're pushing the podcast with Luis.
Yep, Luis.
And I know like just different things you're posting. It's like a little more than before. So like kind of touch on what your goal is with that and what's kind of your plans.
I don't really have a master plan behind it. I mean, we don't spend more than like one day a month usually prepping content, and we shoot a few videos. Our whole goal is just to give people a look behind the scenes with like Requity Insights, to show our current investors or our current audience, industry peers, just giving them a sense of this is what we're doing, this is what we're seeing, this is where we find opportunity.
So
there's no master plan. It's just
as of now, it's more so just like kind of secondary branding rather than actually building out a funnel to get new investors and clients from.
Yeah, that's pretty much all it's been. Yeah, it's just really been more of like, we want to share, I don't really have super ambitious goals with social media, but it may be something that changes over time, becomes a bigger part of our strategy. But I think it's really, you get a pretty high ROI for pretty low time output on just keeping relevant and keeping present. And then our investors have a way in our newsletters, we have like some actual content we can share with them. It gives them a way to kind of follow along with us for those that want to hear more about us. So it's probably number one for our current investor base first, because we believe that if we serve that group of people, that just tends to snowball, right? And then occasionally, we probably get maybe 2 people a week that reach out that are interested in setting up a call to get on our investor list. So there definitely is some traction that comes from like a colder audience, and
I've noticed that you've went on the other real estate podcasts, but I will say the whole like real estate podcast world, it's so like fucking boring. Like I think the only guys that do it good are like the ones that aren't even in, like Grant Cardone doesn't like fuck around with the other like random real estate podcasts. He plays in like the real social influencer kind of world. And then like Ryan Pineda's moving more towards that. Alex Mosey's basically a full-time influencer now. Huberman's basically an influencer now too, which is interesting to see. But it's dude, I hate the real estate like very like boring Zoom call kind of podcast.
Yeah, it gets to be the same thing each time. Yeah, that's why I pivoted and I stopped our podcast for 6 months or so, and then we more recently, a few months back, we relaunched it. But I just wanted to teach on stuff that we're doing, and I didn't want to have my scripted interview questions and just have a bunch of guests on anymore. I said I really like teaching. I think I do enjoy teaching, and I like going into the weeds of what we're doing, and it tends to translate well. But I just didn't really enjoy as much, just like the same scripted interview conversations.
And they always ask like very vague, like, and then you're trying to explain to them why mobile home parks are good. It's like, we talk about like stuff after that, you know?
Yeah.
It's always the guys who agree. And I watch a few of your interviews.
Sure.
I forgot the exact names of it. But
Yeah, sure. No, I think it's been a nice change of pace. Like, we occasionally will do an interview, maybe every here and there, but like we're mostly just focused on just teaching on topics that seem meaningful. So we'll kind of put some of our thoughts into a few bullet points and then just jump in and teach and share. And so it's been more fun for me. I don't know if it's going to translate to better results or better audience, but hopefully someone likes it.
Yeah, an interesting thing, because Grant Cardone was the reason why I got into commercial real estate. And then Ryan Pineda is one of his guys. Like, he would go to some of his like really high-end paid coaching programs, and he's taken off, and now he has a big fund that buys multifamily. But he has like all these different courses, a home flipping business, and a bunch of different things, and he scaled up in 2 years like crazy amounts. And an interesting thing was, from his social media, he started selling courses for like all different things along the road. Like, he was originally a house flipper guy, and he sold a course on like how to source houses, how to like set up a home flipping business. And all of the money that he raises were actually people that went up and up and up all of his different courses, and he got that idea from Grant. Because Grant, he was saying, when he would do like the big real estate masterminds, he would come across guys that couldn't get into as big of deals as him. They ended up being his investors in his deals. And I was like, oh, so all your... Because my grand theory with the social media thing, I'm just kind of spitballing now. I know we're just bouncing all over the place. But I noticed that the social media is really good for like really wide entry-level audiences, and it really sucks for like higher level skill audiences. What I mean by that is, typically the people sitting on the internet by default are, for lack of a better term, the fucking idiots who have a lot of free time. So typically selling entry-level surface-based products do better on social media rather than actually niche down type things. So like as an example, I did like a thought experiment one day. All right, I'm making very specific MMA and jiu-jitsu vlogs that are like very specific, targeted towards like what an actual MMA fighter or jiu-jitsu guy would watch. Gets a few hundred views. Then I was the first guy to do like a Jake Paul breakdown video, and it was just like a thought experiment for me. Let me see if I can get 100,000 views. And it blew up, and I was like, oh, okay, so that's like kind of proving the concept. And then there's another thing with like when Conor McGregor hurt his leg, I made a video about like how he hurt his leg, but like in layman's terms, explain it to like your average idiot rather than someone who actually trains. Yeah. And that blew up. So
I think it's also just that there's less people that fit the category of the niche education, right? So if I start getting into the weeds on something really niche, like how we convert our interested campers through our phone calls, like there's only a few dozen groups in the entire country that need to know some of the information that I could teach on.
So it's like, I was trying to think like,
whereas you just get a much bigger audience for the really basic, like I call it like the funnel, right? And I realized I had someone give me the feedback that my general like tendency is to teach to people like me, which is like bottom of the funnel, right? Whereas like if I want to reach more people, I need to talk to the top of the funnel, which is like which is what a lot of these like trained or practice influencers, I should say, like are good at, is they talk like really high level to top of the funnel, and they draw in a really wide audience, and then they kind of bring them down as people grow with them. So I think that's the concept. And
so just to kind of talk about my own shit I got going on with the MHP value. So I'm still with Other Street, but the MHP value is like my testing at the funneling, which was like the email blasts that you've seen.
Yep.
And then like text blasts I've sent out. I've been doing it with the deals, but I've been sending a specific one to like mom and pop owners. So like you probably haven't been getting them, I hope. Or I'm segmenting it out.
No.
Either way, all right. If you didn't get it, that's good. You weren't supposed to. But I ended up saying to some like institutional guys, and they're like, "Why the fuck are you texting me?" And I'm like, "Oh, I'm sorry, bro. It's awful." But like my thoughts with the YouTube, because I was like, all right, none of these old people search YouTube, but they're on Facebook. So what I'm doing is I make the MHP value videos that are very niche down, targeted towards mom and pops, like what are typical contract timelines, like the typical questions I get, like why is it 45 days, or what, like is this enough of a deposit, like it's the very green questions mom and pops will ask. I'm like, let me make a bunch of videos on that. And first I did the email blast. No one's really engages with email blasts, so my next thought were I do the combination of the email blast, and this next thing I'm rolling out is a link to the video with like a picture of like the thumbnail or whatever, text it to them. It just gets them to click, but then I could retarget Facebook ads because I know all these old people are on Facebook, the people who click that video. And that gets them in the funnel. Because I realize like a social media funnel doesn't work for old people, but I think if I could funnel them through internet and text, click, then the Facebook ad could target them, and that'll brings them
Nice.
to the landing page of MHP Valley. That's
It's great. No, like
thoughts of like how to source deals.
It's great having those funnels dialed in. Yeah. I'm still, it's all new to me, but we are doing a lot more Google and Facebook ads for our campgrounds, but more so for the guests, not as much for buying them yet, but we're doing them for guests to kind of get people to get brand awareness and convert, and that's been a whole different world for me, but it's a great skill set, I think, to have that whole thing dialed in.
Yeah, I'm trying to figure it out, but your guys is, I'd love to be like my grand scheme of getting in the industry was like do the whole Grant Cardone, raise money, buy big deals type shit. That's exactly what you're doing, so that's why it's cool and I want to sit down with you.
Yeah, so, for sure, man.
Yeah, man. So you're a stud. Anyways, I thank you. That's pretty much it. Thank you for letting me talk to you, man.
Yeah, great chat, so looking forward to it. Thanks, man. Appreciate it.
We'll definitely be in touch.
100%.
Anything you want to tell, in case a random investor wants to invest in the Requity Group or anything, how do they get a hold of you?
You can visit our website, therequitygroup.com, and plug in on LinkedIn too. I'm pretty active on there. So
awesome.
Cool.
Right,
Thanks.
Thank you.